What's up, friends? My name is Akable, forex trader. I'm a day trader. I normally speak French. I'm not all that good like that in English, but let's managing, okay? Okay. Today in this video, I'm coming to break down for you a secret that you don't know, and always you used to blow your money every day, every night in the forex trading. Today I'm going to reveal that secret to you. Let me tell you something. After watching this video, you will never blow your account again. You will never blow your capital if you follow what I'm coming to explain to you. If you follow what I'm coming to teach you right now, you will never and ever blow your capital. So this will be the first and the best video that you have never seen before in your life. If you were part of those who have been blowing their accounts every day, every night, today is the end. I'm telling you, my brother. So now let me tell you something. We know that, especially as a new trader, there is a lot to take in and learn when it comes to the forex market. Therefore, in order to make things easy for you, I have compiled a list of my top tips in order to help you come up with a successful forex trading result. But please, before we will continue, I want you to subscribe to my YouTube channel and click on the notification bell in order to not miss any of my video. You can also leave a comment or ask any question. I will answer you. I will be very glad to appreciate your participation. Thank you. Now, let's start. The first thing you need to know before you start make money in the forex market, you must first of all find your trading strategy. With your trading strategy, you can do a lot. I'm now coming to break down for you. Please listen to me. I'll mention 6 steps that you must follow as a law for you to be successful in forex trading. So pay attention well. The first thing you have to do is to find your trading strategy. Any successful trader necessarily has a good trading strategy. There is no point in trying to take a trade if you do not know which strategy to rely on and on which chart, technical and fundamental analysis basis you are going to build your trading. You can't just trade like that because you see the candle is moving up, so I'm buying. The candle is coming down, I'm selling. No, it's not like that. You don't trade like that. You must have a strategy that you must rely on before taking a trade. Please, the trade you are about to take should clearly explain under what condition you should enter the market. That is very important. And under what condition you should exit. This is the basis of a trading strategy. When you enter into the market, your strategy must tell you that by this point you need to enter. And your same strategy must tell you that by this point, when you see this, you see that, you must come out from the market. And what you have to see before entry, what you have to see also before exit, all this I'm going to teach you in different video. I'm going to teach you in different video. I will do a lot of videos, so please make sure you subscribe to my YouTube channel to learn more and more about the forex trading, and you will be part of those who used to grow their accounts every day. You will be part. But if you don't follow what I'm talking about, you are going to always blow your account. This is not what I want. That's why I'm doing this video. Subscribe to my YouTube channel to get more from me. There are plenty trading strategies that can be built around chart analysis or certain technical indicators such as moving average, relative strength index, and moving average, converging divergence, Fibonacci retracement, and whatever, plenty. There are plenty, Ishimoku and whatever. All these are the technical indicators that you can also rely on to place your trade. This is the strategy that you must also rely on. But before you take this as your strategy, you must master it. You must know the left and right of this strategy. Don't just trade because you have seen your friend trade this strategy, so you too you take it like that. No, it's a foolishness. I'm telling you. You don't trade by what your friend is doing. No, trade by what you yourself you think is okay for you. And if you have done a mistake, in case that the trade did not go in your favor, you will learn from that mistake and you will never make that mistake again. We don't trade just like that. Trade your plan. Having a clear trading plan helps traders to keep cool and stay focused on their trading strategy, avoiding as much as possible rash and emotional decision making, which often comes at the cost of the traders. You see, in forex trading, when you don't plan, you are going to take decision through your emotion. It's going up, it's going up, it's going up. No. I even lost this opportunity. You are going to do a lot of maybe. No. We don't trade like that. You must trade according to your plan. Please. This is the second things you have to put in your mind. The second things you have to rely on. Trade your plan. If you are a trader without a plan, you don't call yourself a trader. Anyway, you know how to trade. Know how to trade is know how to place a trade. There is a difference between know how to trade and a trader. A forex trader is somebody who is taking a trade according to his plan, according to his strategy, according to what I'm coming to break down for you right now. That is this type of person, we call him trader. But if you just place a trade, you are not a trader. You are not a trader. Don't call yourself a trader. You just place trade, that's all. But me, I'm not want to teach you how to trade. I want to teach you how to become a forex trader. That's the difference. So now, please, sorry for the way I speak English. The English is not proper, it's true, but let's manage like that. As I told you, I speak French normally, but I'm trying my best to help you in English. So pay attention, try to understand what I'm talking about, okay? Let's move on. Our third point is only trade what you can afford to lose. Our first forex money management law is to trade with what you can afford to lose. As a beginner trader, you should only deposit what you can afford to trade with into your trading account and no more. If this amount of money, let's say for example $10, if this $10 you lose it today and it won't do anything to you, I thank God. But if you lose $10 and it will affect you, please don't put $10 into your account. Put $5 or $2, something that at least you can afford to lose. This is for example. Don't put money into your account that you cannot afford to lose. You have to set yourself a maximum acceptable loss per month, a maximum acceptable loss per week, a maximum acceptable loss per day. And if you hit that loss, stop trading immediately. The idea is that you are only risking capital that will not destroy your mindset, will not destroy your thinking or your life, will not even change your life. No. If you lose it, make sure that your life will still be the same. You will not be under pressure. You will cry because you have lost money, because forex market is not 100% sure. Put it in your mind.
Do not ever trade with the money you need for something. For example, you you want to rent a house, you want to buy food stuff, you want to buy a bill, you want to do whatever, any other things, but that money you want to use it to trade and double it fast and pay your rent, and you will have at the end something attached to it. No, it's very dangerous. We don't trade with this type of money. When you put money in your forex trading account, make sure that you don't need that money urgently. That money, you don't need it right now. That is very important. The money that you need right now, don't put it in your forex trading account. Forex trading is not a guaranteed money maker. Some people will end their forex trading career only having made loss. Do not risk what you cannot afford, please. It's very important. Let's move to the next step. The fourth things you need to know to be successful in forex trading is to quantify your risk per trade. Once you have decided on an amount of money you are happy to trade with, the next step in creating your forex money management plan is to establish how much you are going to risk per trade and how you are going to measure this. Please, this will help you determine where you will place your stop loss each time you enter the market. Stop loss is very important. It's very important. We don't just place the trade just like that. When you want to enter into the market, you must enter with stop loss, because anything can happen. Even a best forex trader can also lose. And put in your mind that any trade can lose at any time. So that is why you need to place a stop loss. And to place the stop loss, you need to quantify your risk per trade, which means that per each trade that I'm going to take, if you are okay with risking $1 or $10, it means that this risk is your risk per trade. Each trade you have to take must have a risk, and this amount of risk that you are going to take per trade, you also have an amount of risk you are going to take in the week, in the month. It's very important. We've talked about it already, so I'm still repeating it again. That is the only way you will be profitable in this forex market. The next things you need to observe is to establish your risk reward ratio. It's very important. Now, you know how much you want to risk per trade. Establish how much you are establish also how much you will make as a profit on this trade. For example, when you want to risk $1, make sure that your profit will be $2 or $1 or $3. That is the risk reward ratio. You must establish your risk reward ratio. So this one is going to help you place your take profit for each trade. This choice will be depending on your strategy and your trading profile, which means that your trading strategy must allow you to get a good risk reward ratio. If where your profit supposed to be, the trade doesn't give you this opportunity, don't take that trade. That's why I'm saying is dependent on your strategy. We've talked about it already. The strategy that you are going to rely on before placing a trade will help you determine your risk reward ratio. Now, if your risk reward ratio is 1:1, it means that If you are risking $10 or $100, your profit will be $100. Now, if your risk reward ratio is 1:3, it means that if you also risk $100, you want to have as a profit $300. Now, all this will depend, as I told you, on your trading strategy. It's your trading strategy that will clarify everything for you. Then, if you want to learn more about it, about the risk reward ratio, and you want to learn more about it, you can write to me, send me a comment about it, then I'll do it in the next video. I'll break down again for you in the next video. But first of all, what you have to put in your mind, observe all what I just explained to you for you to be profitable in forex trading. Now, the last thing you need to observe is to redraw your profit. You must redraw your profit. The mistake that many traders are doing is not redraw their profit or not redrawing regularly their profit. It's very dangerous. If you start to make a return, you start make money in forex trading, you start make money, you start growing your trading account, withdraw some of it, enjoy it. Enjoy it is very important. You see, when you don't withdraw your money in your trading account, you must have one thing in your mind. If you don't withdraw your money, in order to increase your trading account, it's normal, it's true, but you need to look after the profit when there is one. The longer the money sits in your trading account, the more likely you are to trade with it and possibly lose it. More the money is in your account, you will think that, oh, the money is plenty, so you are going to risk big, you are going to take high risk, and at the end of the month or at the end of the week, you have lost all your profit. This one is the foolishness. Please redraw part of your profit. If you have make $100 this week, if you no want to redraw, or at least redraw $50, is very important. Use it for something else, and other $50 is in case that you are losing that $50, which means that if the $100 was in your account, you may lose all. So be careful, be careful. Please redraw part of your money. This is step that I just mentioned for successful forex trader should stand you in good stead when starting up as a trader. Remember to stick to your rule once you have established exactly what they are. Please make sure that you respect all what I just explained to you. When you trade according to what I just explained to you, you will be profitable in long term. And this is how all the best forex traders work in this forex trading business. We don't trade just like that. We trade by rule and regulation. We trade by trading plan. We trade by strategy. It's very important. So if I want to do the recap of everything, the first thing you need to do is find your trading strategy. The second is trade your plan. The third is only trade what you can afford to lose. The fourth is quantify your risk per trade. And the fifth is establish your risk reward ratio. And the last one is withdraw your profit. Now, as I told you, I normally speak French. I don't speak English correctly, so let's try to just manage. Okay, try to manage what I'm the way I speak English. Okay, then I just want to, what do you call it, make sure that you will get the powerful knowledge, the good knowledge about forex trading. Now if you like this video and you want to learn more about forex, please subscribe to my YouTube channel and click on the notification bell in order to not miss any of my videos. You can also leave a comment or ask any questions. I will answer you. I will be very glad to appreciate your participation. So thank you very much. See you next time.